What's happening, everybody? It's your boy, Sean McLaughlin at Options Sean on Twitter. This is the Options Jam session for March 7th, 2024. Hope you're doing well. We got a lot to talk about today. We've had a mixed bag of adjustments to the portfolio this week. Some good, some bad. The good news is the winners far outstripping the losses that we've incurred. So, you know, that's the way you draw it up, right? You want your winners to be bigger than your losers in the grand scheme of things. And well, we're going according to plan in that. So that's the good news. So let's get into it. But before we drop any charts here, I gotta show the old disclaimer here that everything we discuss is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from following my process and the way I manage risk. So let's start at the top, like we always do, at just a high-level view of what has been transpiring in the markets. And here's the S&P 500, the SPY ticker. As you can see, once we cleared this hurdle that was the 2022 highs, it's been nothing but, well, I shouldn't say nothing, but it's been relatively smooth sailing. We've had a couple little dips that quickly got bought, no sustained dips, and the markets are going higher, and they're continuing to go higher today. So that's the backdrop. Volatility index kind of confirms that. Not really much to discuss there with VIX. It's near the lowest levels of the last 4 years since COVID, near the lowest levels post-COVID. So that tells me that markets are relatively well behaving right now. All right. So enough about that. Let's get into action in the portfolio, positions that we've exited, ones that we took profits on, and ones that we took losses on, and some that we've added to, which is not something we do a whole lot around here. But let's start here with Taiwan Semi on Friday, March 1st. We exited at our profit target, our bull call spread. We got into this back on January 24th, right around the portfolio accelerator when we were all in New York. We bought the May 115 calls and shorted the May 135 calls for a $6 debit. Our profit plan or our target was to get out of this trade if and when it traded up and through our short strike. It did that. On the 31st, we got out. We got out. What did we get out at? I should always have these things up. We got out for $13.65. So we paid $6, got out for $13.65, more than doubled our money. Well done. We didn't really take any heat in this trade, right? We got in here. You can see here, we had a little bit of a pullback that we had to weather, but you know, we certainly weren't sitting in any large losses at that point. It's been mostly smooth sailing all the way, but we're out of Taiwan Semi. Congrats to any of you who got into that trade. All right, so that's the good. Let's talk about some bad. Snowflake, boy, did that thing really get just demolished at their last earnings report. We were in a bull call spread in May options. We bought the May 210 calls and shorted the May 240 calls. The position was looking great for a little bit, and then earnings happened and the rug got pulled on us. But the good news is we paid $10.75 for that, and we did not suffer that large of a loss. We got out at $5.60. So, you know, considering that we had such a big move down, right? The fact that we lost $5.60, which is just about, we lost $5 basically because we got out at $5.60. We lost $5, a little less than half of what we paid for this thing. Hey, that's not bad, right? I mean, that's the nice thing about defined risk trades, and that's a nice thing about having a plan. And look, we got out, and the thing has continued lower since. So glad we got out when we did. We might only be able to get $1 for that spread now. I haven't looked, but either way, we're out. The loss totally within the realm of possibility. Remember, when we put on bull call spreads, we don't want to take 100% loss, but we go into it fully knowing that that $10.75 that we paid, there's a chance, perhaps a good chance, that we will lose everything, right? So anytime we can get out for less than that, it's a win because we size our positions in such a way that if we did lose everything on this trade, you know, it's just a normal loss for our portfolio. My rule of thumb, I don't stick to it 100% all the time, but my rule of thumb when I size positions is I don't want to risk more than 1% of my portfolio equity. Maybe I'll risk up to 2% depending on the trade if I have a really strong conviction about it, or if I have a really good risk reward setup. Maybe I'll risk as much as 2%, but very, very rarely will I risk more than that. And most of the time, probably 80% of my trades, my max risk corresponds to about 1% of my portfolio equity. That helps me sleep at night. That may be very conservative to some of you, but for me, it keeps me in the game. And this is all about staying in the game. That's what trading is all about. All right, back to some good news. Spotify, here's one we got out at our profit target. We got in a bull call spread on December 11th. You can see it right here on the chart. We took a little heat before we got, soon after we got in, but it never triggered our stop. And then it just ripped higher since then. And we got out on Monday at our profit target. The plan here was once it breached 250, which was our upside short calls. Once we breached that level, then we wanted to get out. And in this case, we paid 17 bucks for the spread. We got out for 37 bucks. So paid 17. Got out at 37. That's more than a double. I love it when a plan comes together. So we are out of Spotify. Now, the other side of the coin. Here's a long put trade. This was one of those trades. We had a couple of these that we got out of this week, and we'll talk about the next one next. But we had a couple of trades, bearish trades that we put on over the last few weeks. If nothing else, then to just hedge our portfolio, because we had a lot of long positions on that had a lot of open profits. That's Spotify being one of them that we just exited. One way, not the only way, and certainly not necessarily the best way, but one way we can protect ourselves when we feel like we might be a little bit overexposed in one direction. In this case, the long side, we had a lot of open positions on with a lot of open profits on the long side. One way to balance that is just to take some short positions in some stocks that are relatively weak. And if you look at this chart in ACLS, this chart screams weakness since the summertime. I mean, it's just been nothing but a downtrend since the summer. So this felt like a good stock to hedge. Well, you know what? The market screamed higher. So I guess we didn't need those hedges. So no surprise that ACLS did not really work well for us. We got out on Monday. We paid $5.25 for this one, and we got out at $3.60. So not a terrible loss. Not a terrible loss at all. Again, better than zero. And I sized that position in such way that it could have been a zero, but we got out at $3.60. So no big whoop, as the kids used to say. I'm showing my age there. All right, next up, DH Horton. Same story. This was another one of those trades that we were looking for some bearish exposure to hedge the portfolio, and DHI was looking like after this sell-off here, it looked like it showed its hand that it might be a leader to the downside on a rollover. Well, the market had other ideas. As you can see, we got in here on the 27th. It looked like it was going to work for us for a couple days, and then boom, we got stopped out on Monday the 4th. This was a bear put spread that we paid $5.90 for. We got out for $3.30. So not bad. Paid $5.90, got out at $3.30. Now remember, this is like a mixed bag, right? We had a couple of winners, we had a couple of losers. But if you're paying attention to the numbers we're talking about here, my winners have been much larger than my losers, right? I could have a 35% win rate. I might even have closer to a 30% win rate. I haven't tallied it up, but my win rate is definitely less than 50% on all these trades that we do in all-star options. But the winners tend to be larger than the losers. And that's math that works in all of our favor. So just keep that in mind as we go through some of these losing positions. All right. And then lastly, for portfolio adjustments this week, I think this is the last one, our China large caps ETF position, FXI. This is a position, this is something we don't do very often. And JC and I talked about it on the morning show this morning, or me and Straza talked about it on the morning show this morning. But this is a position that we're actually legging into. We would like to buy into it at lower prices if we can. So we're buying long calls. These have some weird strikes, these January $25.85 strikes. There must have been a split at some point. So that's why we have these weird strikes. But anyway, we're buying the January 25.85 calls. And we're buying it in thirds. We bought our first third for $2 back on the 28th, on February 28th. Well, on Wednesday, no, I'm sorry, on Tuesday, during this sell-off here, where this red candle is, we were able to buy our second tranche at $1.75. So we bought our first third at $2. We bought our second third at $1.75. And we have a limit order resting to buy another third at $1.50, which would complete our position. If we get it, great. If we don't, well, that's because it's ripping in our favor. So that's a problem we'll be happy to have if we didn't get the full position on. But so just wanted to let you all know that we added our second tranche and we got a resting order working to fill the third if we get a chance. So that's what's up in FXI. Oh, no, we did have one more trade to discuss. Merck, here was that one we got stopped out in. We got long calls back on February 12th. We bought this little dip. We had a beautiful breakout here, and we thought we were getting a great opportunity to get in on a dip. And for about a week and a half, it looked like we were geniuses as the stock went higher. But the market has its own sense of humor, and it's since rolled over pretty hard on us. Stopped us out yesterday. We paid $2.55 for the September 140 calls, and we got out. What did we get out at? We got out at $1.62. So not bad, right? We paid $2.55, got out at $1.62. I'll take those kind of losses all day long. All right. Whew. Okay, that was a lot. That's a lot of updated positions this week since we last spoke. Now let's talk about our updated stops. Now, first and foremost, we got to talk about Uber because Uber is approaching expiration. Our calls will expire next week, next Friday. All right. We are long March 60 strike calls. We got into them on November 8th. And boy, did we get into them. Wow. I mean, sometimes it's better to be lucky than good, but this was a hard trade. We called it a hard trade when we did it. It felt like we were chasing this one. Little did we know that it was just getting started. We are sitting on a monster gain here. We have not taken any profits along the way. We've got the full position, which was our plan going in. We're long the March 60 calls we paid $1.55 for. Well, those 65 calls are well in the money as Uber is trading with a 79 handle last I checked. So this chart's a little out of date. It's got a 79 handle. But because we're approaching expiration, we got to be tight with our risk management. So for now, right now, my stop is at 77.25. That corresponds with yesterday or 2 days ago's intraday low. What I'm going to do from now until next Friday, if we have it all the way till next Friday, is I will be trailing my stop below, the 3 to 5 day intraday low, the trailing 3 to 5 days. Whatever that intraday low is will be my stop. I'm using a little discretion. It might be the 3-day low. It might be the 5-day low. I'll just kind of eyeball the chart and find a level that clearly indicates that, at least in the short term, the trend might be exhausted. And I will keep updating those stops in the chat room, in the Telegram chat room. By the way, guys, if you are a All-Star Options subscriber and you're not in our chat room, what are you doing? Hit me up, info@allstarcharts.com, and we'll get you hooked up with the chat room. You should be in there. If nothing else, just have some fun, talk options. All right, so Uber, our stop is at 77.25. All right, the rest of these stops are really more just kind of maintenance stops. We're not raising the stops all that aggressively, but just trying to keep staying behind the market because, the further this bull market goes, the more ripe we become for a pullback. And we got a lot of open positions open, a lot of open profits at risk right now. Good problem to have, of course, but we don't want to give too much of it back. So I'm being fairly aggressive, and this has been, I'm a broken record on this over the last 4 or 5, 6 weeks. I'm being fairly aggressive in trailing my stops in a lot of these open positions. And so these stops updated stops we're gonna run through next here are just me kind of incrementally moving them higher, not being too aggressive, and just and some of them aren't even a big move. Like the previous stop might have been just $1 lower, but hey, best practices, right? Just gotta keep moving the needle forward. And so with IBM, we're moving our stop to 182, pretty logical level there. We had like a little intraday spike on one day, but for the most part, 182 has been support since this big earnings gap. So as long as IBM can hold above 182, we're going to stick with this trade. Wells Fargo, this is one where we just kind of inched our stop up. I think our stop was 50 before. We're moving up to 51 now, which corresponds with a 50-day moving average, something I like to do from time to time. So 51 is our new stop in Wells Fargo. Boy, this thing is really taken off. We got very close to being stopped out right in here. In fact, intraday, on a couple of occasions, intraday Wells Fargo traded below our stop loss level. But as you guys know, who've been following along with me for a long time, I wait for closing prices. And if the stock closes below my risk management level, then I will exit the trade near the open of the next trading day. And boy, I'm glad I stuck to my guns on that, because there were a couple days where Wells Fargo traded below our stop level back when it was lower, but it always rebounded and closed higher. We held on, and now we're being rewarded. But now our stop is 51 for Wells Fargo. Next up is Cadence Design Systems, ticker CDNS. This is a bull call spread we got into back on January 24th. It's been chopping around for us, but starting to move our way. We'll see. But either way, we're moving our stop up to 297, which is kind of below last week's pullback. If we break 297, I don't like this trade anymore. I'll look to get out. So 297 is the new stop in Cadence. Mosaic. Okay, here's one we should talk about, because it has triggered our stop loss intraday today. Actually, just maybe about an hour ago, I noticed it. My stop, this chart's a little out of date. It does not include today's candle, but my stop is now 32.50, and this is a short position. So we're long puts. We're long the June 30 puts. So it's a bearish position. We want this stock to go down. It's one of those portfolio hedges we've been talking about. My stop is now at 32.50. We've traded above that today, intraday, so far. We'll see where it closes. If it closes back below 32.50, then it lives to fight another day. If it finishes above 32.50, I will exit it tomorrow. Now, the nice thing is that these are puts. We pay $2. That's our max risk. We know the most we can lose. If it goes to a zero, that would suck, but totally fine. I sized my position in a way that a 100% loss is totally fine. I'm a broken record on that too. But Mosaic, just to reiterate, our stop is now 32.50. New Corp, our ticker NUE, or long calls here in January 230 calls to be precise. We got into this on February 21st. It's been mucking around a little bit. It looked like it was going our way. It has since pulled back. I hope it's found some support. We'll see. But either way, 180 is now our stop loss in New Corp. That's it. Wow, that's all we have for updated stops. Now I'm just going to rip through some new trades we've put on this week. For those of you who are new here, if you want trade details on why we got into each of these trades, the setup we like, the structure of the options trade that we chose, the strategy that we chose, where we're taking profits, how we're getting out, where we're taking losses, all of that is laid out in a blog post for each one of these trades. You could find that blog post at allstarcharts.com. Head to the options section, head to the members section, then head to the options section. You will find all of our detailed trade plans. If you are not an All-Star Options member, you'll need to sign up with us to get those full plans. Again, shoot us an email, info@allstarcharts.com. We'll be happy to hook you up. But just real quickly, I'll go through the three new trades that we've put on since we last spoke. We put a bullish trade on Robinhood. This is a play on the big crypto breakout. We think Robinhood participates, so we are long in Robinhood. We are long Valero Energy. This chart does not reflect, excuse me, the breakout that we're seeing today. Valero is breaking out today, so this one's working out for us pretty nicely, at least to start. And then we put a bullish trade on again on the crypto thing. Marathon Digital Holdings, ticker MARA. This is a crypto miner. Again, this is a trade on the big crypto breakout. We think Mara has a chance to slingshot higher to participate in this rally. If it doesn't, that's okay. We've got a plan for that too. But Mara is a bullish trade we've put on. We put that one on yesterday. All right, folks, we did it. We made it. We're through. As always, if you have questions, hit us up, info@allstarcharts.com. Even if you just want to say hello, I like hellos. Or you can hit me on Twitter. My Twitter handle is @OptionsSean. I'll always engage with you there as well. Thanks for tuning in. I hope you guys learned something today. I hope you found this interesting. Have a great weekend. I know it's only Thursday, but have a great weekend anyway if you're getting a head start. And we'll talk again next week. Until then, take care.